Hello friends, today's topic is speculation business. In this topic, we will be studying what is the treatment of income or loss from the speculation business, what is the meaning of the speculation transaction as per provisions of income tax law. In speculation business, while studying section 28, we came across an explanation 2 of section 28 wherein it was stated that the income or loss of a speculation business is deemed to be distinct, is deemed to be different from the normal business profit or loss. So on your screen, as you can see, explanation 2 to section 28 specifically provides that where an SSC carries on speculation business, that business of the SSC must be deemed as distinct and separate from any other business. So, the purpose of insertion of this explanation was to keep the laws under section 73, the laws which is used to set off the income. The purpose of this laws was to keep it distinct and different under section 73. That's why this insertion of explanation was done as per the income tax law. On your screen, this becomes necessary because section 73 provides that losses in speculation business, unlike other business, cannot be set off against the profits of any other business other than a speculation business. Likewise, a loss in speculation business carried forward to subsequent year can be set off only against profit and gains of any speculative business in the subsequent year. So, because of this provision in section 73, wherein the loss of a speculative business cannot be set off against any other business, because of this provision, there was a necessity to insert a provision, a explanation in the provision of section 28, wherein the income of the speculation business, income from the speculation business should be distinct, will be deemed to be distinct from the normal business profit, so that the loss under section 73, the loss, the speculative loss under section 73 will be allowed to be set off only against speculation income. Now, we have studied about the explanation 2 of section 28 and section 73. What is speculation business? But first of all, what is a speculative transaction? Has it been defined under any provision of the income tax law? Yes, it has been defined under clause 5 of section 43. So, what does the definition say? What is the definition of the speculative transaction? On your screen, speculative transaction means a transaction in which a contract for the purchase or sale of any commodity, including stocks and shares, is periodically or ultimately settled otherwise than by the actual delivery or transfer of the commodity or scripts. So there is settlement by way of otherwise than by the actual delivery. So there is absence of actual delivery and there is settlement of the transaction. So what do you mean by actual settlement of delivery? So when you purchase a script, when you purchase a share, and without obtaining a physical delivery of shares, without obtaining delivery of shares, you have settled the transaction by way of sale, and the net amount is profit or gains in your hand. So you are not actually paying any amount, and you are not receiving actual sales amount, but you are receiving only the profit or loss from the transaction. So there is no actual delivery of shares, for example, but there is settlement of transaction over here. So when the transaction is set off in a way where you receive a net gain or net loss, it can be termed as it is a speculative transaction. Now, this is the bare act section that we are studying, which is subsection 5 of section 43. So, speculative transaction means a transaction in which a contract for a purchase or sale, for a purchase or sale of any commodity, including stocks, shares, is periodically or ultimately settled otherwise than by the actual delivery or transfer of the commodity or scripts. So again, there is settlement of transaction, but there is no actual delivery. If this is the case, then it will be termed as speculative transaction, provided there are exceptions to it, provided that for the purpose of this clause, a contract in respect of raw material or merchandise entered into by a person in the course of his manufacturing or merchanting business. In the course of his manufacturing or merchanting business. So it is in the course of his business to guard against loss through future price fluctuations in respect of his contracts for actual delivery of goods manufactured by him or merchandise sold by him. So, where a person in the normal course of his business enters into a contract wherein he has entered into such contract to guard against loss through future price fluctuations. So, it won't be termed as speculative transaction as per proviso A of subsection 5 of section 43. Second is a contract in respect of stocks and shares entered into by a dealer or investor therein to guard against in his holdings of stocks and shares through price fluctuations. So, a dealer or investor in stocks and shares is also exempted. Such contract won't be termed as a speculative transactions, which is to guard against loss in his holdings of stocks and shares. C. A contract entered into by a member of a forward contract, by a member of a forward market or a stock exchange in the course of any transaction in the nature of jobbing or arbitrage to guard against loss which may arise in the ordinary course of his business as such member. So, contract entered into by a member of forward market. D. An eligible transaction in respect of trading in derivatives referred to in clause AC of section 2 of Securities Contracts Regulation Act 1956 carried out in a recognized stock exchange. So it should be an eligible transaction and it is in trading in derivatives. So what is eligible transaction over here? Which will be termed over here. So let's first read what is E as well. An eligible transaction in respect of trading in commodity derivatives carried out in a recognized association which is chargeable to commodities transaction tax under chapter 7 of the Finance Act 2013 shall not be deemed to be a speculative transaction. So all these transactions are deemed not to be a speculative transaction, provided further that for the purpose of clause E of the first proviso in respect of trading in agricultural commodity derivatives, the requirement of chargeability of commodity transaction tax under Chapter 7 shall not apply. So this clause E, wherein it has been stated that where there is a trading in commodity derivatives. So commodity derivatives excludes agriculture commodity derivatives. So any commodity in agriculture will not be a speculative transaction. It means it is exception to exception. So you can say that clause E of first proviso is not applicable to a agricultural commodity. So accordingly it will be termed as a speculative transaction. It's an exception to an exception. So clause E is an exception that it is not a speculative transaction, and this proviso further adds that clause E is not applicable to agricultural commodity. So in a way we are saying that to an agricultural commodity clause E is not applicable, and accordingly speculative transaction, any transaction in it is a speculative transaction. So agricultural commodity is a speculative transaction. Explanation 1. For the purpose of clause D, the expressions eligible transaction means any transaction carried out electronically on a screen based system through a stockbroker or sub-broker or such other intermediary registered under Section 12 of the Securities and Exchange Board of India in accordance with the provisions of Securities Contracts Regulation Act 1956 or the Securities and Exchange Board of India Act 1992 or the Depositories Act and the rules, regulations or bylaws made. So to sum it up, eligible transaction is a transaction which is carried out electronically through a stockbroker or sub-broker or intermediary which is registered under so and so act, directions issued under those acts which are mentioned above by banks or mutual funds on a recognized stock exchange, and which is supported by a time stamped contract note issued by such stockbroker or sub-broker or such other intermediary to every client, indicating in the contract note the identity unique client identity number allotted under any act referred to in subclause A, and permanent account number allotted under this act. Under this act is the Income Tax Act. So it should be an electronical transaction through a registered stockbroker, and the stockbroker will issue a time stamped contract note to the assignee, to the SSC. This is what is the meaning of eligible transaction for clause D, which is trading in derivatives. And what is a recognized stock exchange? Trading in derivatives should be in a recognized stock exchange. So recognized stock exchange means a recognized stock exchange as referred to in clause F of section 2 of Securities Contracts Regulation Act 1956, and which fulfills such conditions as may be prescribed and notified by the central government for this purpose. Explanation 2. For the purpose of clause E, the expressions commodity derivative shall have the meaning as assigned to it in Chapter 7 of the Finance Act 2013. Eligible transaction means any transaction carried out electronically on the screen-based systems through member or an intermediary registered under the bylaws, rules and regulations of the recognized association for trading in commodity derivative in accordance with the provisions of Forward Contracts Regulation Act 1952 and the rules, regulations, or bylaws made or directions issued under that act on a recognized association. Again, here also the eligible transaction is nothing but there should be an online transaction on a registered association, on a recognized association, the registered broker, and the registered broker should issue time stamped contract note to every client indicating the unique client identity number allotted under the Act, rules, regulation, or bylaws referred to in subclause A, which is Forward Contracts Regulation Act, and the permanent account number allotted under this Act. In clause D, we studied what is the recognized stock exchange. Here, recognized association, what do you mean by that? Recognized association is referred to in clause J of section 2 of Forward Contracts Regulation Act, and which fulfills all conditions as prescribed and is notified by the central government for this purpose. So, meaning of recognized association. Now let's further interpret what the definition says of speculative transaction. Speculative transaction means a transaction in which a contract for purchase or sales of any commodity, including stocks and shares, is periodically or ultimately settled otherwise than by the actual delivery or transfer of the commodity or scripts. This is specified by subsection 5, section 43. However, this deeming provision does not apply to the following, which is a company whose gross total income consists of mainly income chargeable under the heads interest on securities, income from other sources, income from house property, capital gains, and income from other sources. So it won't apply. The deeming provision won't apply to a company whose GTI, the gross total income, doesn't contain any of the business income. So in a way, we are trying to say that there is no distinction required in absence of normal profit. So if you have income from other than business income, which is interest on securities, income from house property, capital gains, and income from other sources, then the deeming provision of speculative business is not applicable to you. To a company, further, it's not applicable to a company the principal business of which is the business of trading in shares, the business of banking, or the business of granting of loans and advances. So it is not applicable to so and so company as well, which is trading in shares, which is into banking business, which is into business of advancing loans and advances. Accordingly, if these companies carry on the business of purchase and sale of shares of other companies, they would not be deemed to be carrying on speculation business, which is coming from explanation 2 to section 73. So, company who doesn't have any income from normal business, there is no requirement of distinction of a separate profit of speculation business. Also, if a company is a banking business, if it is trading in shares, if it is into advancing loans, then the distinction and the deeming provision of speculation business won't be applicable to such companies as per explanation to section 73. And as per subsection 5 of section 43, what we studied was there are certain exclusions wherein transaction not deemed to be speculative transaction. There was a proviso which was inserted. If you remember, the following forms of transaction shall not be deemed to be speculative transaction. First is hedging contract in respect of raw materials or merchandise. A contract in respect of raw materials or merchandise entered into by a person in the course of his manufacturing or merchandise business to guard against loss through future price fluctuations in respect of his contracts for the actual delivery of goods manufactured by him or merchandise sold by him. Second pointer is hedging contract in respect of stocks and shares. A contract in respect of stocks and shares entered into by a dealer or investor therein to guard against loss in his holdings of stocks and shares through price fluctuation. Forward contract, a contract entered into by a member of a forward market or stock exchange in the course of any transaction in the nature of jobbing or arbitrage to guard against any loss which may arise in the ordinary course of his business as a member, or trading in derivatives, an eligible transaction carried out in respect of trading in derivatives in a recognized stock exchange. Meaning of eligible transaction was nothing but it should be carried out electronically on a screen-based system, and it should be supported by a time-stamped contract note issued by the broker. Trading in commodity derivatives. An eligible transaction in respect of trading in commodity derivatives carried out in a recognized association which is chargeable to commodities transaction tax. However, the requirement of chargeability of CTT is not applicable in respect of trading in agricultural commodity derivatives from assessment year 1920. So we had also read an exception to commodity derivative wherein there is no requirement of chargeability of CTT, and since CTT won't be applicable, it can be said that agricultural commodity may be a speculative transaction because the CTT is not chargeable from assessment year 1920. So meaning of eligible transaction is nothing but electronically on a screen based system, and the broker is supposed to issue a time-stamped contract note to the client, to the SSC. So this concludes the speculative business. What is the meaning of speculative business? What is the meaning of speculative transaction as per subsection 5 of section 43? What are the exceptions to it? What is the meaning of speculative transaction? And further, what is the explanation to the section 73 says for the exceptions related to the companies to whom speculative transaction is not applicable? So I feel we have covered everything over here. So first was explanation 2 to section 28, because of which there is a deeming provision wherein speculative business is distinct from normal business. And then section 73 explanation 2 to section 28 was inserted only because of section 73, wherein the loss of speculative business will be set off against the profit of speculative business only. And then the meaning of speculative transaction with various exceptions to it. This was the barrack that we covered, and differently these are the interpretive notes that I have mentioned over here, and the additional notes is regarding the explanation to section 73, wherein speculative business transaction or the deeming provision of speculative business won't be applicable to the companies who do not have normal business profit or who are trading in shares, banking, or in the business of loans and advances. So this concludes the part of speculative business and speculative transaction.